we've been looking at Imdex for many years at perennial value, and we've always liked the high gross margins from their core product. Unfortunately, for many years, these really high quality earnings were getting distracted by losses in their oil and gas business. So a key catalyst for us to look at Imdex more seriously as an investment was new board members coming in and making the commitment to divest the oil and gas division, which they've done. So those losses have gone, and you've now got focused on that core high margin part of the business, which is a global leader. Well, we've seen Imdex's sales come from a broad range of regions. They're quite big in the Americas, particularly in South America in the exploration sector, but also North America, obviously Australia with the mining sector being so strong. But to really give us the confidence that they were world leading, we attended a worldwide expo in the US of all the mining companies from around the world and mining services companies. So while we were there, we spoke to a lot of customers, particularly geologists, and they were very impressed with Imdex technology. And obviously we checked out all the competitors. That expo is only every 4 years, and it was a real strong validation that Imdex is cutting edge in their technology. We believe we're about mid-cycle at the moment. So clearly when we were buying Imdex at the beginning, it was in the recovering part of the cycle. And Imdex has got a great chart on this. You can see their tools on higher over time. And to us, it looks like we're about mid-cycle. At this point in time, they're still about a 20% discount to the market. So while Imdex has probably moved to fair value, there's a few things on the balance sheet which could be quite interesting. They've got the last remaining oil and gas asset is written down to zero. And we actually believe there's genuine value there, so they could be getting some cash back in. They've also bought some new technology out of New Zealand, and we don't know what that'll look like yet. They're still doing the due diligence on it. But that new technology really lifts productivity for drillers, so that's a new product that they can sell globally. So about fair value at the moment, strong balance sheet with potential upside from these acquisitions, so we still like it at this point in the cycle. What we really liked about the recent acquisition from Imdex is, unlike the past, where they've gone out and bought some pretty new edge technology and potentially probably a little bit early, this deal's very well structured. There's clear milestones, there's still technical due diligence going on before the money's paid. An option was acquired, so they have the option to buy the business if they can see it becoming commercial. So we really like the way the deal's structured in a low risk manner. We think that probably reflects the new board that's in place at Imdex. The technology itself looks really interesting, very big productivity improvement for drillers. So if it works, it could be a real game changer in the drilling space. Well, the key risks that we monitor for Imdex is really their commodity exposure. So they're about 60 to 70% exposed to gold at the moment. So things to look at there are how many junior gold companies are raising money, because obviously that's spent on exploration. A lot of the mid-tier mining companies, how much are they spending on exploration? And that actually looks quite strong at the moment, so we're pretty comfortable on that. The gold price, obviously we can get that daily and we monitor that. Again, that looks pretty healthy at the moment. So from a commodity mix point of view, we're pretty comfortable. We want to monitor the gross margin. We want to see that continuing to improve because that's strong evidence of their intellectual property. If we start seeing weakness in the gross margin, that would suggest to us that some competitors are catching up to them. No signs of that yet, but that's something we're monitoring closely. The company reported strong results in February, and what we saw there was the balance sheet's in excellent shape. That balance sheet could actually get better with some more further asset sales in the oil and gas business. That strong balance sheet gives them good optionality. So while the valuation's moving towards fair, that upside is still there from a strong balance sheet. They can go and acquire businesses like the one in New Zealand, which they're doing due diligence on at the moment. What we really like as well is it doesn't seem to be well owned across the investment community. So that's a further upside as people look to this end of the market for some high quality mining services exposure. We think Imdex stands in good stead.